How's it going, everyone? It's Sam. Today I want to talk to you about how you can make more this bull run than everyone else, right? I mean, not literally everyone else because there are going to be, a couple thousand people that watch the same video, but you can make more money this bull run than you think. And, this is going to be covering how to leverage trade. If you haven't heard about leverage trading, this is something that you can do to amplify your returns. Now, some people feel very strongly that they want to do this and they're already trading, right? There are some people that have been doing this for a decade plus. There are other ways to do it outside of crypto. So some people have been doing this for, decades and decades in the options market or trading futures. But you can do it in crypto and get huge returns. Now, there is some level of risk, which we'll cover as well in this video, but I want to go through what leverage trading is, how you can use it to amplify your returns, and one of the best platforms out there, which is Margex. So if you don't mind, hit subscribe, turn on the bell notification underneath the video so you can see future videos just like this. I have some other videos on the channel as well going through leverage trading. What is leverage trading? How to use it to amplify returns, some different strategies as well. So after you watch this video, you can also go watch those videos. So let's start here. This is Margex. This is a trading platform, right? You can leverage trade. Now, what is leverage trading? It's basically the ability to gain access to more money than you have. Okay, so let's say you have $100 and you want better returns because you realize even if Bitcoin goes in doubles and you want to hold Bitcoin, let's say it goes in doubles, you turn your $100 into $200. Okay, great, but is that life-changing? Probably not for most people. So you might want access to 500 or 1,000. Now, of course, in that situation, I would just say, if you only have $100 to put in the market, I'd probably spend some more time making money, right? But let's say, you have $1,000 and you want $5,000, or you have $10,000 and you want $50,000. This is something that you can do to get access to that capital. Now, there are different ways of doing this. Some people use prop firms, and in that case, you need to be a trader for several months or a year. You have to get certain returns. You have to pay fees to start trading, and you have to pass certain tests, and that can be quite expensive. And you might not even be able to trade. The fact is, in Bitcoin, you don't have to be a genius, right? If you just buy Bitcoin long term, you can get pretty good returns. If you go long on Bitcoin over the long term and you just do it at smart points, you don't have to be a genius, and you can make good money long term. You shouldn't have to wait a couple months to a year to get access, because by then Bitcoin could already be at 100,000. So you can sign up for something like this, Margex. It's a link underneath the video. You can start trading in a few minutes. You don't have to even give your personal information. They don't ask you for your name, your social security number. They ask you for an email, a password, check their terms and conditions. And then you can start by depositing money onto the platform. Now, you have to deposit actually crypto onto the platform. So you would go to the wallet, hit deposit, and then maybe you have some crypto at Coinbase or Binance or something, and you can transfer it over. It's pretty simple. You can look that up if you want to. Then you go over to the trading terminal. You can see just 5 tabs at the top. They make it really simple compared to other platforms that have 30 drop downs. There are no drop downs. So you go to copy trading. Boom. This is one of the 5 tabs. Then you can go over to convert. You can convert certain cryptocurrencies to other cryptocurrencies. You go to your wallet, and then you can see all the different cryptocurrencies you have. Then you can refer other people as well. Then they have some settings and stuff over here, some sliders. Now, the layout of Margex is quite simple. You have your trading window over here. You have TradingView, which is the charting app right here, the charting mechanism. And TradingView is one of the most well-respected in the space. I think it's probably the biggest charting platform. You have indicators right here. You have different measuring tools here to see, peak to trough, that kind of stuff. How far is the crypto up or down? You have all different kinds of tools here. You have the order book, and then you have all deal indicators down here as well. Now, you can trade all different kinds of cryptos. There may be 50 different cryptos here. So if you're looking to trade some $10 million crypto, this isn't the platform for you. But if you want to trade Bitcoin, Ethereum, Solana, Caspa, some of the bigger cryptocurrencies, $1 billion and up, maybe, this is a good platform. And the cool thing about this platform is you can use all different forms of collateral, which we don't have to get into in this video. But you can use something like Solana to trade Bitcoin. which is really cool. Let's say you think Bitcoin's going to go up, but you think Solana is going to go up even more. You can use Solana for your collateral, meaning like if you are going to open a trade, let's say you open up $500 trade, $100 of collateral. So you put up $100, you go 5x, so you get $500 to trade with. You can do that with Solana instead of like US dollars, that $100. You can put up Solana for that, and then you can get paid back in Solana or XRP or Cardano. If you like something a lot, you can actually trade with that specific cryptocurrency, but you can trade something like Bitcoin. Now, obviously, if you're trading with more money than you have, that's not a free lunch. Like there's got to be some drawback, right? Well, there is in a way. You have to be smart about this. Let's say you just buy spot Bitcoin. You just buy Bitcoin through Coinbase or something. Pay some fees, you get your hands on some Bitcoin. Are you ever going to be liquidated? No. You can always hold on to that Bitcoin, especially if you withdraw it from a centralized exchange. You can just hold it on cold storage. It's never going to be taken away from you if like the price goes up or down or anything like that. Let's say it goes up to 100K. You've gained 69%, 69.49%. Great. You had a really nice return. Let's say you buy Bitcoin at 5x. Okay, so you have maybe $1,000 or something, and you buy $5,000 worth of Bitcoin at 59,000. You would actually be liquidated. You would lose that $1,000 if it goes down to 47,200. So that's the difference. That's the big difference between leverage trading and just buying spot, just buying normal, right? If Bitcoin's price goes down to a certain level, you can get liquidated. You can lose your money. Now, of course, you could put a stop loss, which basically tells Margex to close out the position at a certain point. So, for example, if you're looking at this pattern and you're thinking, okay, we're going to break out above this line, you probably want to wait until it's up here, just slightly above the line. But let's say we were down here, right? Let's say the price fell down to 54,000. You're like, okay, this is a good time to long because we're going to move up to the top of this line or even maybe break it. You could put a stop loss right here so you don't actually lose the $1,000. So if it breaks down below this line and invalidates this triangle, you don't lose all your money. So you can put stop losses, you can protect yourself. But if Bitcoin continues to fall down and you have no stop loss, you could lose that $1,000 at 47,200. But if it goes up, let's say it goes up to 100K, instead of making 70%, you'd make 347%. So on that $1,000, you'd actually make $3,474.60 instead of $690. So you'd make way more, like 5x more, right? That's how it works out. 5x more if you leveraged it. Now, how do you protect yourself from being liquidated? That's the main question, right? How do you make sure? Well, there are various ways to do that. You can put stop losses. You can wait until we're at, let's say, the bottom of a channel. Maybe we're down here and we're at 54,000. Okay, we've played this little triangle. When you look, we're actually at support. Several times we've seen support around 53,800, 52,500. So maybe there's a little bit of downside, but not a ton. At a 5x, if you're sitting at $54,000 Bitcoin, we would have to go down to, let's see, $43,200 Bitcoin. So it's definitely possible, but also we saw support at 49,000. This was the biggest drop that we've seen recently. We also have seen a lot of resistance, and I say support and resistance. Support is where we bounce off of and move back up. Resistance is where we go up to and get rejected and fall back down. So we often see some kind of resistance turn into support. You can see that here, 48,800, 49,100. Like this is basically the same thing. We saw resistance turn into support, boom. So we would probably see that same thing. Even if we broke down below this, we fell down, $10,000, we'd probably see some support here. We'd probably see some support here at 44,400. So yeah, like a liquidation point of 43,200 would actually be really safe within the crypto leverage world. You would make it a long time, and a lot of people would consider that pretty safe. Now, how do you do this? At first, well, you can do something like this, right? You can 5x big assets that aren't quite as, volatile. When you do something like a 5x though, you're not getting a huge amount of volatility. I mean, in traditional markets, they would consider this a lot, but within crypto trading, you're not getting a huge amount of volatility. You can also up the leverage. So you could do something like 30x, 50x, something like that. And you would get a lot more leverage very quickly, which is more risky, but also more upside. What I think would make sense, obviously, you need to understand leverage trading. You need to understand how to use this terminal. So like I usually use isolated margin. You can look at the difference between cross and isolated, but isolated just easier to understand, easier to manage. You can set a limit order. So if you say, hey, I'm only going to buy Bitcoin if it's down at, let's say, 57 or 58,500. Okay. So if it falls down there, then I'll go long. You could also do it. What would make more sense would be like, if you're looking for the bottom side of this trade, maybe you wait until 54,500. So you put that in here and then just wait for it. If you're like, no, there's some big piece of news that just came out, I need to buy, you could just do market order. So it buys it automatically. It doesn't look for a certain price. You can change your order size right here. You can change your collateral and what you want to trade right here. So it's quite simple. You just hit buy market then, and then it will show you like your margin, your available balance, your estimated liquidation price, etc. before you get in the trade. Now, if I were doing this and I want to if I want to get double the returns this cycle, then just, buying spot. Okay, I would still, as a newbie, have a good amount of my crypto just in spot, right? I don't think it's smart for everyone to go all in on leverage, because then you can be wiped out. And even if Bitcoin goes up to 100,000, you can still lose the majority of your crypto. You don't want to be emotional when you trade. So let's say the majority of your bag goes to spot. And depending on how risk averse or risky you are, you can change these numbers around a little bit. But let's just say, for the sake of argument, you want to go 90% in spot. Okay. Let's make the numbers easy. You have 1 Bitcoin, right? You go 0.9 Bitcoin into spot Bitcoin. You just put it in cold storage, and then 0.1 Bitcoin you use to start leverage trading. Okay. You could do something like half of it in a 5x long that you put at a pretty, decent point in the market. So when there's some fear, let's say you buy at 55,000, liquidation points at 44,000, you would get a huge return if we move up to 100,000. Okay, so you leave that maybe 0.05 Bitcoin, and then 0.05 Bitcoin you use to trade this market a little bit more aggressively. Maybe you want to go 10x or 20x or 50x or whatever, right? That gets riskier, but you use for times like this, like where we have a triangle, and you set stop losses. If, let's say, you short the market here because you think we're going to go down to this line, you put a stop loss right up here so that you don't lose out if we turn the other way and just continue up. If you long the market here at 54,000, you set a stop loss at maybe 53. You always put the stop losses and the take profits slightly before or after where you think. So let's say you were long this market at the bottom of this range. Let's say you got it right here at 54,000, like exactly. Don't put your stop loss at 53.8. I mean, you can do whatever you want, but like, don't do it right then. Put it further down, like maybe 53 or something like that, because oftentimes the lines will be right outside, or they'll look for liquidations, or they'll look to stop loss hunt or something like that. So it'll go right to your point, it will knock you out, and then it will continue up. And that's the worst feeling in the world. And same thing with take profits. Let's say you think you got in here and then we're coming up here. Like, don't put your take profit right at 59.4. Put it slightly before it, maybe before a big mental barrier. So if we're at 54,000, you go long 30x or something like that. Put your take profit like 58.9 or something like that. Like, don't get too greedy on those types of things. But of course, like, you'll understand this more over time. These are just little tips and tricks that can help you. And then make sure that you're not too emotional. If you're emotional, you have too much in the trade. But that can be a good way to start. And honestly, like, you should do a lot more research. You should start with very small amounts. Don't start with 10% of your portfolio your first trade. Just start with like a couple $100 on the platform. Get to understand it. Then as you feel more comfortable, you can increase the trades. This is typically a good time to be leverage trading. One, when the market's just generally bullish, which it doesn't feel like it has been recently, but we're up over 100% since a year ago, right? Let's see right here. We were at 25,000, 26,000 a year ago. Now we're at 59,000. And a couple of years ago, we were at like 20,000, 19,000. That was 2 years ago. So generally the market's been bullish, but also recently we've just been choppy. So people have still been able to make money on these trades. So if you want to try out this platform, there's a link underneath the video. They're doing a big Caspa airdrop, meaning basically if you just trade on the platform, you get more and more Caspa tokens. You just have to click that link underneath the video. There's a button right here. It changes to start trading on Margex if you already are signed up for the airdrop, but it's like get in on the airdrop or something like that. And then you can start trading, sign up, and you can start trading and get some free tokens. That will come in a little bit though, because the event is going on for 20 more days. So you can get in now, start trading, get used to the platform, and then get access to future airdrops. So let me know your thoughts on all this underneath the video. Thank you so much for watching. I really appreciate it. Make sure you understand leverage trading. Like, my goal is not to get people wiped out. My goal is to get people to understand some of the tools that they're going to use, and then maybe they can use them properly during this bull run and make a ton of money. But of course, like, you have to realize you can lose money while leverage trading. And it's a lot harder to get it back than it is to lose it. So you have to be careful about risk management. Let me know your thoughts though underneath the video. Really appreciate you watching. Check out Margex underneath the video, and I'll see you in the next one.